The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!
Good afternoon. Getting right down to business here. Yep, we're doing it live, doing more at 4 weekday afternoons, right after Guy Benson at 3 and just before the 790 KBC News Blitz with my pal Randy Wang. It's Motec on Money. We are live on the air on 790 KBC, streaming live online worldwide, KBC.com, and, of course, the on-demand Motec on Money podcast, KBC.com, Apple iTunes, YouTube, all your favorite podcast platforms. A mixed finish, but a record-shattering day for stocks once again. A volatile day for precious metals. The Federal Reserve is expected to hold interest rates steady tomorrow. That'll be a big announcement. This after 3 consecutive interest rate drops. It was a tough day for the health insurance company stocks, weighing on the major averages on news the Trump administration wants to hold Medicare rates almost flat next year. Names like Humana, United Health, CVS Health among the S&P 500's worst performers, but the S&P 500 was the one that was the star of the day today, hitting a record high, up 28 points to 6,979. The Dow tumbled 409 points at 49,003. The Nasdaq managed a closing gain of 216 points at 23,817. The yield in the 10-year note now to 4.24%. The Wall Street Journal reports the Centers for Medicare and Medicaid Services proposed to hold payment rates to an average of 0.09% increase next year. That was far below what the companies and Wall Street had been expecting. The plan would deal a blow to major health insurers, according to the Journal, which altogether estimated to count on their Medicare Advantage plans for more than $500 billion in annual revenue. General Motors shares rallying today. It took off by about 9% on projected higher-than-expected cash flows and promised returned more cash to investors. UPS, meanwhile, said it expects to cut an additional 30,000 jobs this year as it continues an automation push. UPS, of course, big with the Teamsters Union. The company reported higher quarterly profit, and its shares edged higher by just a fraction, 0.2%. Airlines in focus, of course, because of the big storm back east. That winter storm Fern, as it's being called, has especially impacted American Airlines. More than 950 American Airlines flights scheduled for today have been canceled, representing nearly a third of the airline's daily schedule, according to the flight data provider FlightAware. Nervous time in the Middle East, with more U.S. forces already in or heading to the region as horrific images come out of Iran. The protests in Iran, which began at the end of December, sparked by the fall of the Iranian currency, the rial, quickly spread across Iran, and they were met by a violent crackdown by Iran's government. President Trump today receiving multiple intelligence briefings that signal that the hold of the Islamic Republic regime is weakening, according to the New York Times. They put out a report today. That report says the intelligence indicates the Iranian government's hold on power is at its weakest point since the Shah of Iran was overthrown in the 1979 revolution. All this as the USS Abraham Lincoln aircraft carrier and accompanying warships are moving toward the region alongside additional military forces. One of Israel's top military commanders says Israel is ready on all fronts in the event of a U.S. strike on Iran, triggering Iranian retaliation against Israel. We'll discuss the very latest on all of this with military analyst, retired U.S. Marine Corps Lieutenant Colonel Kempfer, retired Marine Corps intelligence officer, host of the Strategic Risk Assessment Talk podcast. Will also be joining us live later this hour. Closer to home, President Trump signing an executive order for the feds to take over LA's wildfire rebuilding efforts, hoping to fast-track what's been a frustratingly slow rebuilding process in the areas devastated by the firestorms a year ago, including Malibu, Pacific Palisades, and Altadena. Fat Brands, that's the owner of the restaurant company, which includes Fat Burger and Johnny Rockets, filing for bankruptcy protection today amid legal troubles. This company is based here in Southern California. Fat Brands filed alongside Twin Hospitality Group, the Dallas-based operator of the Twin Peaks and Smoky Bones chain, and which has roughly a 95% stake. The two companies filing for bankruptcy in the Southern District of Texas this week with no financing lined up to continue operations long term. Remains to be seen what's going to happen to those outlets. The LA City Council, meanwhile, looking to return to voters a revisit of a revised Measure ULA. Remember that, the so-called mansion tax, which has impacted commercial real estate and now the rebuilding efforts in the burn areas. I'll discuss all of that later this hour with Jerry Sullivan, National Managing Editor of the Real Deal Commercial Real Estate Online News Source. But first, on your money, the markets, the economy, and the whole works now. Joining us live, Jonathan Hoeing, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan Hoeing, good afternoon.
Frank, it's great to be with you, and so much happening on Wall Street right now. I'll just mention as a funny aside, you mentioned fat brands going bankrupt. I used to own that stock. It was always a very memorable ticker symbol. It was FAT, F-A-T. And at one point, the restaurant stocks, the small cap stocks looked good, but I ended up taking about a 20 or 30% loss, and that ended up being a pretty good move because ultimately, as we've seen, the stock goes to zero. So, you always have to have a stop loss in whatever stock you buy, and some of them actually, people say it can only go to zero. Some of them actually do.
On the air live with Jonathan Hoeing, and so remains to be seen what's going to happen to all those restaurants. A lot of fat burgers here in Southern California, Johnny Rockets too. So we're going to tune into what's going to happen there from the company. But right now, looks like there's no sizzle there on the grill, or certainly financially any longer. But what about? Let's talk about the precious metals, gold and silver, making volatile moves to record highs this week, then pulling back. Silver is still around 111 here, and gold is above 5,000 at 5,004. Give us your reaction to that epic move in the precious metals and the volatility we've seen in the last 24 hours.
Well, it's a great, I think, illustration, Frank, of the point that I make in Price is Primary. We've been talking about all-time highs in metals for literally a year now. And it is only in the last couple of weeks that it's really become kind of a front page news story. And you've started to see some incredible volumes pass through those very now well-known ETFs, GLD and SLV. Look, they're just off all-time highs. And yes, volatile, but generally all-time highs tend to beget more all-time highs. And I just don't think we see necessarily the type of euphoria that we've seen during other, really true bull markets just yet. So we might be in the 7th or 8th inning when it comes to metals, but I don't think we're in the 9th inning because, Frank, the big story here today has been the dollar. The dollar is down about 10% over the last year, and that is prompting this major outperformance in non-U.S. stocks and major outperformance, as you said, in so many of the precious metals and commodities.
What do you think is going on with all this? Multiple factors have been mentioned attributing to this tremendous run-up in gold and silver prices, not to mention the platinum and the palladium, by the way. But you're right. The story today looks like the dollar is at a 4-year low. We're at 120 versus the euro right now. We're at, looks like 138 versus the British pound sterling, 152 versus the yen, which has been getting a lot of attention. And we're at 17.16 versus the Mexican peso, 136 Canadian. We're going to be paying more attention to those exchange rates here now. What do you see ahead for the dollar? And again, with inflation supposedly under control, obviously new attention focused on the currencies as one of the big reasons why we're seeing the precious metals soar the way they have.
Indeed, and I think that, Frank, these are trends that once underway, if you look at history, they tend to persist for oftentimes years at a time, periods of strong dollars and periods of weak dollars. And, we've had, in general, a period up until the last year of extreme strong dollar for the better part of a decade now. So I think this is a trend that sticks. And, there's ways that everyday investors can play it. You always want to do your own due diligence. But if you buy, for example, FXE, that's Frank X-ray E as in euro, that is an ETF that literally tracks the price of the euro. Same thing with FXY, that's the Japanese yen. So I do think that there's ways that everyday investors can actually participate in this dollar move, even something like BWX. That is just an international treasury bond fund. So you're buying, government bonds from Europe and government bonds from Japan and government bonds from China, instead of global bonds instead of U.S. bonds. It's not patriotic. It's just the reality of what's working on Wall Street right now.
All right, tomorrow we're going to be getting the news from the Federal Reserve, a decision on interest rates, a statement on the economy, and then a full-blown news conference from Fed Chairman Jerome Powell. It'll be one of his last news conferences and last big statements coming out from him. What do you expect tomorrow?
Well, I mean, Frank, everyone's talking about interest rate cuts, but I'm quietly seeing a lot of instruments that outperform when interest rates go up, especially on the short end, start to outperform. Things like RAVI is a great example of an ultra short-term, TFLO is a great example of a Treasury floating rate fund. So, people are expecting a cut. I think we might be surprised. And, it wasn't too long ago that 30-year yields was nipping at 5% once again. So the so-called bond vigilantes, I don't think they're dead. I think they're waiting in the wings with an eye on, as you said, inflation, spending, everyday Americans. I mean, what's the irony is that even as the market tips new highs, we have consumer confidence now at the lowest point since 2014. Most Americans seem to be hurting, or at least saying that they're hurting. So there's a real dichotomy between the market and what everyday Americans seem to be supplying, and I think the inflation has something to do with that for sure.
Right, and that consumer rating, consumer confidence reading was a big factor in trading today, and it was an interesting finish today with the S&P 500 hitting a record high here in the face of all of this. You talk about climbing a wall of worry here. We got the S&P 500, the broadly based market index, at a record high here. The Dow, meanwhile, plunging more than 400, and the NASDAQ coming in for a closing gain of 216. So talk about a dichotomy or trichotomy, as the case may be. What do you make of this mixed market picture and also the market volatility we've seen recently?
Well, a big part of the Dow's loss today was United Health. That stock was down about 20%, which is a huge move for a major healthcare, as you know, Frank. Interestingly, I mean, this was due to politics, and we're seeing the Trump administration take a more and more active role in the market, more positions in private companies. The government hasn't taken positions in healthy private companies since the 1950s. So we're in somewhat uncharted territories in modern times here. So a lot of decisions now being made for political reasons, not to mention just economic ones. But I think it's an opportunity, Frank, to play some of these foreign stocks. For example, EEMS, that's Eric M as in, I say Morgan Stanley, MS, EEMS. That's a fund that tracks small emerging market stocks, totally off the radar screen, not in your S&P 500 index fund, but doing well and without a lot of buzz. And I think this could be the start of a multi-year move for these international names.
On there live with Jonathan Hoeing, and of course we're watching the Middle East very closely. We'll be speaking to Kempfer live here later this hour on U.S. military moves toward Iran and what might play out here. In the meantime, oil still hovering around $60 a barrel here at the moment, ahead of what could be some significant action. What about what's happening there? What's brewing, and how this might play out, and the kind of market reaction we might see in the energy markets as well as the stock market?
Well, a lot of the energy names are starting to do very well. I mean, even something as pedestrian as DBE, that's David Boy E as an energy, which holds a basket of the major energy names. The one I still like, Frank, is AMLP. This is an ETF that tracks a basket of what they call master limited partnerships. Most of these are involved in the shipment of oil or natural gas, but it pays a hefty dividend, somewhere on the order of 8 or 9%. So even if oil is flat, or even if the market goes down, these are names, I think, with a solid enough dividend you can sleep at night. AMLP, as always, do your own due diligence, but it's doing well, and I just don't see that type of euphoria that you see towards other areas of the market like Bitcoin or AI, for example.
Any other shipping names that you like? I think you mentioned boat at one time. That's an easy one to remember.
Yeah, I mean, you have to be somewhat of a skeptical of just fancy ticker symbols, but boat has done actually quite well. It's up almost 9% year to date, and when you think about the fact that the S&P is roughly flat, boat, which is a basket of these shipping names, and what's interesting, Frank, is given all that uncertainty you're alluding to, the cost of shipping is actually skyrocketing. What they call the Baltic Dry Index, which is basically the rated cost to charter one of these massive shipping outfits, has skyrocketing. So that's helping the shipping names. Boat I also like because it's not correlated with the rest of the market. In effect, it zigs when the rest of the market zags. So, it's always as one part of a portfolio, not your only part, but check out definitely Boat, BOAT, as another dividend-playing value idea that's doing well without a lot of buzz.
All right. Speaking of buzz, the aerospace business here in the Los Angeles area appears to experiencing a renaissance due to a lot of private engagement now in space. And SpaceX, of course, is still here and getting ready for a big IPO. And any more intelligence about that SpaceX IPO or anything else that might be connected to it?
Well, Frank, oftentimes on your Instagram, you post these incredible photos of SpaceX launches and the satellites in space, and it's truly amazing to see history being made really in front of our eyes, and it's benefiting, I think, a lot of these aerospace names, even with the president threatening a lot of the defense names, a name like Lockheed Martin, LMT. I think you can look at that stock here. It's pressing up against all-time highs hit about a year and a half ago. So it's a great example of non-AI, right? It has been those Mag 7 for so long. But look, at one point in the last week or two, you had Apple down 10%. So the market is broadening out, and a lot of these names, foreign value, are doing quite well, better than people would expect.
Very interesting. Any other specific places where you are putting money now and or taking it off the table?
Sure. If for a risk account, I like GWX. This is a small cap international fund. And for income, I think a real interesting idea now is CEMB. That's Charlie, Elephant, M as in Mary, B as in boy, CEMB. This is a corporate emerging market ETF. Again, the markets move in cycles. Emerging markets have been very out of favor for years. They're historically dirt cheap. So this is a way to get income, but also play what I think will be a renaissance in emerging markets as the U.S. dollar continues to fall.
All right. Didn't hear you mention the Magnificent One, NVIDIA, or AI for that matter, or any of the Mag 7 names. What about that sector here at this point?
Amazing companies, Frank. I'm sure you, as most Americans, every day are finding ways to integrate this incredible new technology in our lives. I think it will change our lives. Whether or not that's priced into the stock, is the issue here. And they have not been leading as they once had been. So I'm not a hater, but I think it's, in effect, kind of put up or shut up when you've got names in the timber industry or names in the shipping industry that are outperforming the seemingly once invincible AI. So, we could see a period where those growth names, Frank, they could take 6 months off. They could take 2 years off. If you go back to the early 2000s, they took about 7 years off or 8 years off. So markets have all the time in the world, and I'm always trying to focus on what's working now because that is the best tendency to continue to work in the future.
All right, and last but not least, again, as you know, we talk to the biggest fans of crypto as well as the harshest critics, and we see Bitcoin kind of stuck in the mud lately at around 89K, well off its all-time high, while precious metals have been soaring. What about the cryptos here?
Yeah, I'm surprised, to be honest, that it's held up as well as it has, Frank. Given the balance sheet of everyday Americans, there was a pretty frightening stat. I think Yale University had it that the tariffs are costing the average middle-income family somewhere on the average of $1,700 a year. That's real money, and crypto is, you'd think, probably one of the first things people would sell if they really needed cash. So I'm surprised it's holding in, but I don't see it leading. And you always want to try to find that lead horse when you're putting money to work, Frank. We too often try to find things on sale, and what seems like a dip ends up being the beginning of a bear market. So I don't see crypto stocks leading, and I don't see a lot of the cryptocurrencies leading just yet. So in effect, it's at 89 now. I think you'd rather buy it above 100 for the move to 120 rather than 89 for the move to 100. Make it prove itself by some price action.
All right, Jonathan, thank you very much for taking the call, and we continue to follow you on social media. You do a great job there, too, and following you at the various conferences where you lead the discussions there. Jonathan Hoeing, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan, thank you very much for taking the call this afternoon.
Great to be with you, Frank. Thank you.
Thank you very much.
Nobody does selling better than Shopify. Shopify is the home of the #1 checkout on the planet. And the not-so-secret secret, with Shop Pay that boosts conversions up to 50%, meaning way less carts go abandoned and way more sales going through. So if you're into growing your business, your commerce platform better be ready to sell wherever your customers are scrolling or strolling. On the web, in your store, in their feed, and everywhere in between. Businesses that sell more, sell on Shopify. Upgrade your business and get the same checkout that Skims uses. Sign up for your $1 per month trial period for 3 months at shopify.com/Westwood1, all lowercase. Go to shopify.com/Westwood1 to upgrade your selling today. Shopify.com/Westwood1.
It's back. Hey, it's Dan Bongino. I've got some big news for you. Starting February 2nd, the show is back. That's right, the Dan Bongino Show is relaunching, and we're going bigger than ever. Join me live on Rumble.com Monday through Friday, 10 a.m. to noon Eastern. We'll cover the stories that matter, cut through all the garbage, and get to the truth. Can't catch it live? No problem. Grab the audio wherever you get your podcasts. Remember, February 2nd, the return to the Dan Bongino Show. Don't miss it.
The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!
Moteca Money continues, 790 KBC. Good afternoon. Mixed finish for stocks, but a record-shattering day, as it turns out, with the S&P 500 hitting a record high today of 28 points at 6,979. The NASDAQ also got a pop of more than 200 at 23,817. The Dow, though, down more than 400, down 409 to 49,003, largely due to the drop in shares of United Health, which plunged nearly $70 a share to $282 and change. NVIDIA moving higher by $205 at $188 and change. Tesla up today to $430.90. Apple also on the rebound of nearly $3 at $258.27. Weighing on the markets today, consumer confidence reading dropping sharply in the month of January, in fact, hitting the lowest seen since 2014. As consumers grow increasingly concerned about their financial situations, the Conference Board out with that report today showing the Consumer Confidence Index moved sharply lower in January, in fact, falling below even the lowest readings during the COVID pandemic. Moteca Money continues, 790 KABC. More U.S. forces heading to the Middle East as horrific images continue to come out of Iran. Thousands dead there after protests in Iran started at the end of December, sparked by the fall of Iran's currency, the rial, and quickly spread all across Iran. Those protesters were met by a violent crackdown by Iran's government. President Trump paying attention to all this, receiving multiple intelligence briefings, according to the New York Times today, that say the hold of the regime in the Islamic Republic is weakening. The report says the intelligence indicates that the Iranian government's hold on power, in fact, is at its weakest point since the Shah of Iran was overthrown in the February 1979 revolution. This report out as the president considers using force against Iran after the regime brutally suppressed protests, killing thousands. The U.S. aircraft carrier USS Abraham Lincoln and the accompanying warships moving toward the region alongside additional forces. Meanwhile, one of Israel's top military commanders says Israel is ready on all fronts in the event of a U.S. strike on Iran, triggering Iranian retaliation against Israel. Joining us live now, military analyst, retired U.S. Marine Corps Lieutenant Colonel Hal Kempfer, retired Marine Corps intelligence officer, host of the Strategic Risk Assessment Talk, a.k.a. Strat podcast. He's also active on X at Hal Kempfer. Colonel, thank you very much for coming back to the line this afternoon.
Thank you, Frank.
Give us an update on what you see happening and developing there in the Middle East.
Well, first off, it looked like last week there was a possibility of strikes. Certainly when around the 8th and 9th of January, when reports are coming in that, just thousands and thousands of Iranians are being killed by the regime, just slaughtered, the protesters, it looked like that, going into this weekend, there's a very good possibility that there could be U.S. strikes. And then it switched. President Trump came out and said, they're not going to execute, go ahead with the executions they had planned, and they were holding back on this. So it looked like things are calming down, but part of it was we're concerned about the retaliation, this massive wave of drones and missiles that Iran would send if they were hit, and we didn't have all the ships in place. We had the Gerald R. Ford carrier task force that was sitting off of Venezuela, and a lot of other ships were out of position. So we quickly moved this, what President Trump calls a naval armada, Abraham Lincoln Carrier Task Force being part of that, but a lot of cruisers, a lot of frigates with Aegis anti-air missile systems moving into the Gulf itself, not the carrier, but the other ships, to provide something of a screen if Iran retaliates. With all that said, the options are open. We could launch strikes. Israel has indicated that they would participate in that. The other side, though, is that we may just do a big naval blockade and block the oil shipments. And that may be the strategy that starts to dominate over a period of time.
On the air live with retired U.S. Marine Corps Lieutenant Colonel Hal Kempfer, retired Marine Corps U.S. intelligence officer. And what about these videos that are emerging that Iran supposedly took over one of the carriers or near one of the carriers, threatening suicide drone attacks on the carriers? What do you think of that?
Well, isn't AI an amazing thing? They put out that propaganda. Yeah, they put out that propaganda piece that made it look like they were going to launch a drone carrier and a bunch of other stuff going after the Abraham Lincoln. This is not the first time that the Iranians have put together these AI-infused propaganda pieces to make it look like they have some sort of amazing military capability they don't have. A carrier task force got tremendous defenses. It's sitting way off the coast. It's not in the Persian Gulf. It's sitting out in the Arabian Sea. But probably I would be shocked if they moved it into the Persian Gulf. It'll sit down there. One of the issues they got to deal with is a number of the Gulf states, including Saudi Arabia, have said, look, we are not going to permit overflights attacking Iran. That limits our ability to launch from air bases and certainly for Israel to launch and fly over and hit Iran. So the carrier becomes rather central to any strike-centered strategy that we may have.
On the air live with Lieutenant Colonel Hal Kempfer, retired U.S. Marine Corps intelligence officer. What do you make of the reports that the Iranian government, which of course hard to not assess it this way, that it's the weakest since the Shah of Iran was overthrown in 1979. If in fact there are strikes, who's going to be the next leader of Iran?
That's a really good question. Reza Pahlavi, the son of the former Shah, the one that was deposed in '79, he's been out there saying that he might be an interim, and there is a gathering, a following of his. And frankly, with the lack of any other identifiable leader or central leadership figure, he may end up falling into that position by default. That's one of the things he has done, though, is they've just crushed the opposition, which means there isn't really a clear leader out there, and that's the big question. Now, the other thing we have seen, though, is the opposition does seem to be coordinating in the background, and there's a lot of thought that there may actually be more coordination, more governance within that opposition than we've given them credit for up to now. So there might be like a shadow government waiting in the wings. We just haven't seen it yet.
Very interesting. And turning now to Venezuela and Cuba, President Trump making some comments about Cuba, saying that they're likely to be failing soon. Cuba, which has been an island in a sea of change for decades following the fall of the Soviet Union. It was widely expected that the Cuban government would fall after the Soviet Union collapsed. But give us an update on what you see happening there in Venezuela after the U.S. took out their dictator and put him up on drug charges in New York, and what might happen with Cuba now.
Well, Venezuela, we've been kind of dictating terms to Venezuela, and we're starting to hear that coming back saying, no, we are not going to follow what the U.S. is saying. They don't have really any choice because they frankly just don't have any military means to oppose what we're saying. But one of the things we've still done is we have a naval blockade on their oil, and we have let some oil be sold. One of the problems is we were blocking the oil primarily going to Cuba, and Cuba needs that oil to keep their economy going. As we blocked that, Mexico had stepped in and said, we'll sell Cuba, basically all the oil they need and make up for the shortfall. Yesterday, Mexico said, nope, we're not going to sell them all the oil. We're going to hold back with selling the oil. And then they said, well, we're not succumbing to pressure from the Trump administration. The reality is, yes, they were succumbing to pressure from the Trump administration. If that cuts off the oil flow coming from Mexico, it's not clear how Cuba can get oil now. And at that point, literally the economy starts to sputter and stop. And they're in a very difficult position. We probably are seeing the closest thing to what could trigger regime change in Cuba that we've seen since, 59, going back to, the early 60s. So, we'll see how it rolls out. But it's all, oil is dictating all this. The naval blockade in Iran, if we block that, that's 2 million barrels of oil a day they send to China. That'll put pressure on China. It's a naval blockade blocking oil out of Venezuela. Mexico's basically withholding their oil. It could shift a number of regimes very quickly in a number of different places.
See it tonight, read about it tomorrow, but hear it now on Motec on Money on 790 KABC. Retired U.S. Marine Corps Lieutenant Colonel Hal Kempfer, retired Marine Corps intelligence officer, host of the Strategic Risk Assessment Talk, a.k.a. the Strat podcast, based right here in the Los Angeles area. Colonel, thank you very much for that thorough assessment, and we'll keep an open line to you. Thank you very much for taking the call here this afternoon.
Thank you, Frank.
It's back. Hey, it's Dan Bongino. I've got some big news for you. Starting February 2nd, the show is back. That's right. The Dan Bongino Show is relaunching, and we're going bigger than ever. Join me live on Rumble.com Monday through Friday, 10 a.m. to noon Eastern. We'll cover the stories that matter, cut through all the garbage, and get to the truth. Can't catch it live? No problem. Grab the audio wherever you get your podcasts. Remember, February 2nd, the return to the Dan Bongino Show. Don't miss it.
The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!
Motec on Money continues, 790 KABC. Big news today here in the Los Angeles area with President Trump signing an executive order for the federal government to take over LA's wildfire rebuilding efforts, hoping to fast-track what's been a frustratingly slow rebuilding process in the areas devastated by the firestorms a year ago, including Malibu, Pacific Palisades, and Altadena. We're also watching what's happening in the restaurant business here. Fat Brands, a locally based owner of restaurant concepts, including Fat Burger and Johnny Rockets, filing for bankruptcy amid legal troubles and a ballooning pile of debt. Fat Brands based right here in the Los Angeles area. And the LA City Council now looking to return to voters a revisit of a revised Measure ULA. Remember that, the so-called mansion tax, which has impacted not only residential real estate, but as well commercial real estate, and now also impacting the rebuilding efforts in the burn areas. Joining us live now to discuss all of that, Jerry Sullivan, National Managing Editor, The Real Deal, commercial real estate online news source. Jerry, thank you very much for taking the call on all this big news this afternoon.
Oh, you're very welcome, as always. Good to be here, Frank.
Great to have you with us. First of all, what's your read on the president's executive order with the idea of the feds taking over the wildfire rebuilding efforts at this point?
Well, Frank, and let's be clear about this. I don't know that the federal government has authority to do that. I think, we have a president who traditionally there's been the presidency has offered, the bully pulpit. So a president could magnify his voice beyond maybe his federal authority by virtue of the attention that's given the president. I think we have a president now who has taken the bully pulpit and turned it into more like leverage. So trying to affect situations and almost frame a negotiation. So I don't know what the federal reason or point of entry would be in this instance. I don't know that there is one. Usually that would have, some constitutional reason for the federal government to step in and override state or local authorities. But I do think that he is now in the conversation, and his ideas will be pushed forward, and what he's saying resonates with a lot of people who are very frustrated with the pace of rebuilding.
All right, the fire started January 7th, and we're still burning nearly a full month later. This time a year ago, based on your sources here in the commercial real estate world, what is the current thinking on how long this is going to take and clearing out the red tape that the president wants to clear out?
Well, listen, I think the timeline is a matter of years, start to finish. Certainly some people are going to be able to move into their homes sooner. There's a lot of factors, and it's not, not just red tape. Everyone has their own insurance to deal with. There are questions about, do you have enough value or enough insurance to afford a rebuilding? Not everybody had insurance that would pay for, 100% replacement of their house. Some people want to cash out and move somewhere else, get the money for the land. But in any case, I think it's fair to say it has not gone smoothly. It's not been handled I don't think many people would say it's been handled very well at the local level. And I think it will be years, not months, before either Altadena or the Palisades are anywhere near whole.
All right. In the mix of all this ULA, Measure ULA, the so-called mansion tax, which the commercial real estate folks that we've talked to, and I'm sure you have too, have called it a total disaster, which, of course, was put into place prior to the fires and was already an issue. It looks like now the city council is looking to turn this back to the voters for a revisit. What do we need to know about this?
Well, this is very interesting. And Nithya Raman, who's very progressive, to use that term, member of the Democratic Socialists of America, was a backer of Measure ULA, and she was the council member who proposed a ballot measure that would essentially roll it back quite a bit and sort of mitigate or try to reverse some of the effects, especially on multifamily or apartment development. This is a very key thing, and it's very interesting politically because you have the progressives, a key progressive, essentially giving ground on this matter. And I think inherent in all this is, and what's coming out is that two things, that the measure was sold in a way that wasn't exactly sincere. It was called a mansion tax. It affected, apartment and office developments. And the other thing that becomes clear is the effect it's had on the pipeline of development and for multifamily, meaning apartments. So here in the middle of what everyone concedes, or I would say agrees, is a housing crunch in Los Angeles, an affordability problem. And of course, one of the ways to bring prices down is to increase supply. Well, supply is restricted because of this property transfer tax, which has inhibited lending, people who don't want to be involved in business in LA because it's deemed as too much and it takes too much of the deal. And it's, I think, a de facto concession, but the council today kicked it over to a committee, and we'll see where it goes because this has all the markings of some momentum getting blunted, and now maybe the lobbyists getting involved, and we'll see where it ends up.
All right. Anything else based on your coverage here, coming off 1 year now since the firestorms? Anything else that you're reporting, and anything else that we need to know about that's the most current?
Well, and actually, the Measure ULA, our Carrie Hamanaka did a piece yesterday breaking the story about the proposal that was going to go to the city council, and she followed up today with a report on how it went. And if you look at that story, I think Sean Burton of City View, who's a major multifamily developer in LA, Aaron Kerman, a residential broker. Both of them offer very insightful views about the industry's position on this and how they see this and what they're hoping for. So I would tune into that one very closely.
Yeah, that's very good guidance. And the other big story locally impacting the restaurant business, the parent company of Fatburger and Johnny Rockets filing bankruptcy now. What's your reaction to that? These are, of course, iconic brands here, based right here in the Los Angeles area.
Yeah, and the company has a lot of debt, and it's had legal problems, and its CEO has been jammed up. And that's well documented. But at the core of it is, Fatburger, which is a beloved Los Angeles brand. Johnny Rockets, I love Johnny Rockets. And the company, maybe one of the problems with the company, I don't know, but they have 18 brands. And a lot of them are, those brands that you just don't see a lot of. I remember living in Rancho Cucamonga years ago, and there was a Ponderosa Steakhouse, and I think it's the only one I've ever seen. I noticed today that that's one of their chains. So I don't know if it was too many brands and none of them had enough scale or whatever the problem is, but it's too bad. There's certainly a big, they dot the Southern California landscape in a lot of areas with a lot of interesting brands. And, I think everybody enjoys Johnny Rockets.
It looks like that particular segment of the restaurant business, the so-called casual dining, has come under pressure, not just this chain, but others as well.
Oh, yeah, and I think, especially coming out of the pandemic and now with the affordability becoming such a key factor, and you have the fast food operators who are, aggressively, if you look at the menus at Taco Bell or McDonald's and, addressing the affordability matter. And I think maybe that casual dining got middled. You either cut costs all the way and go to Taco Bell or have a very nice dinner somewhere, and maybe you kind of skip that middle.
Jerry, thank you very much for that comprehensive update on all this. That is Jerry Sullivan, who is the national managing editor of The Real Deal, the authoritative commercial real estate news source. Thank you very much for joining us live here, Motec on Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with Randy Wang, 790 KBC.
It's back. Hey, it's Dan Bongino. I've got some big news for you. Starting February 2nd, the show is back. That's right. The Dan Bongino Show is relaunching, and we're going bigger than ever. Join me live on Rumble.com Monday through Friday, 10 a.m. to noon Eastern. We'll cover the stories that matter, cut through all the garbage, and get to the truth. Can't catch it live? No problem. Grab the audio wherever you get your podcasts. Remember, February 2nd, the return to the Dan Bongino Show. Don't miss it.